Today's cryptocurrency landscape is dynamic and pivotal. Bitcoin has surged past $82,000 while regulatory changes are on the horizon. Additionally, investor sentiment is shifting toward a more rational approach. Here are today's top 10 stories you need to know. The emergence of Web 3.0 technologies is reshaping the landscape of digital interactions. Innovations in this space are focusing on enhancing user control and privacy while leveraging blockchain capabilities. These developments are attracting attention from investors eager to explore the next generation of internet technologies. Web 3.0 aims to create decentralized applications that empower users and reduce reliance on traditional intermediaries. As these technologies gain traction, they are expected to play a significant role in the future of online services. However, challenges remain in terms of scalability and user adoption. The ongoing evolution of Web 3.0 will be crucial for shaping the future of the internet and its intersection with cryptocurrency. Stakeholders are optimistic about the potential of these innovations to drive significant changes in how digital services are delivered. Investors are reacting to recent market changes with a mix of optimism and caution. The fluctuations in cryptocurrency prices have led to diverse strategies among traders. Some are capitalizing on short-term gains, while others are adopting a more patient approach. This divergence in strategies reflects the complex nature of the cryptocurrency market, where volatility is a constant factor. Analysts suggest that investor sentiment will continue to evolve as more market data becomes available. The ability to navigate these changes will be essential for success in a rapidly shifting environment. As investors adapt their strategies, the impact on market dynamics is likely to be significant. Observers are keen to see how these reactions will shape trading patterns and overall market performance in the coming weeks. The decentralized finance (DeFi) sector is experiencing notable developments as new protocols and platforms emerge. These innovations are aimed at increasing accessibility and efficiency in financial services. Investors are particularly interested in how these developments can disrupt traditional banking systems. DeFi projects are focusing on providing users with the ability to lend, borrow, and trade without intermediaries, which is seen as a game changer for the financial landscape. However, regulatory scrutiny remains a concern as authorities seek to understand and manage the risks associated with DeFi activities. As the DeFi sector continues to grow, stakeholders are closely monitoring its evolution and the potential impacts on the broader cryptocurrency ecosystem. The success of these projects could lead to more widespread adoption and integration of DeFi solutions within traditional finance. Looking ahead, the ongoing growth of DeFi will likely play a crucial role in shaping the future of financial services. Recent reports indicate a shift in market sentiment as investors adopt a more rational approach towards cryptocurrency investments. This change is attributed to increased education and awareness about market dynamics. Many investors are now focusing on long-term potential rather than short-term gains, which is seen as a positive development for the overall health of the market. Analysts believe that a more informed investor base could lead to greater stability and reduced volatility in cryptocurrency prices. This shift is encouraging as it reflects a maturation of the market, with participants looking beyond hype and speculation. However, some remain cautious as market fluctuations are still prevalent. The ongoing evolution of sentiment is likely to influence trading strategies and investment decisions in the near future. As the market continues to mature, stakeholders are hopeful that this rational approach will foster a more sustainable investment environment. The cryptocurrency market is witnessing trends in ETF expansions as more financial institutions seek to offer digital asset investment options. This development is indicative of growing acceptance of cryptocurrencies within traditional finance. Analysts note that the increasing number of cryptocurrency ETFs could attract a wider range of investors, from retail to institutional. The availability of ETFs allows investors to gain exposure to cryptocurrencies without directly holding the assets, thereby reducing perceived risks. As this trend continues, it is expected to contribute to the overall maturation of the cryptocurrency market. However, there are concerns regarding regulatory hurdles that may affect the pace of ETF approvals. The ongoing dialogue between regulators and financial institutions will be crucial in determining the future landscape of cryptocurrency investments. Stakeholders are optimistic that the expansion of ETFs will further legitimize the market and facilitate broader participation. In a significant advancement for blockchain technology, ARK has successfully raised substantial capital to further its blockchain initiatives. This funding is expected to accelerate the development of innovative solutions within the cryptocurrency ecosystem. The successful raise has drawn attention from both investors and industry experts, highlighting the growing interest in blockchain applications beyond cryptocurrency. ARK's focus on enhancing blockchain infrastructure aims to improve scalability and security, addressing some of the key challenges facing the industry. As blockchain technology continues to evolve, stakeholders are increasingly optimistic about its potential applications across various sectors. This funding round could serve as a catalyst for additional investments in blockchain startups and projects. The impact of this capital raise extends beyond ARK, as it signifies a broader trend of increasing confidence in the blockchain space. Looking ahead, industry participants are eager to see how ARK will leverage this funding to drive innovation and expand its market presence. Jerome Powell's expected exit from the Federal Reserve has ignited considerable concern and speculation within the cryptocurrency community. As the architect of recent U.S. monetary policy, Powell's departure introduces uncertainty about the future direction of interest rates, which are crucial for digital assets. Historically, the Fed's policies have directly influenced market liquidity, and many investors fear that a leadership change could destabilize ongoing trends in cryptocurrency investment. Some analysts are optimistic, predicting that a new chair may adopt a more favorable stance towards digital currencies, potentially accelerating institutional adoption and legitimizing the sector. However, this potential shift has already triggered pronounced volatility in cryptocurrency markets, as traders react to the looming changes in fiscal policy. The community remains split. While some view the transition as a chance for innovation, others voice concerns about the implications of a less predictable monetary policy. As developments unfold, stakeholders are keenly awaiting announcements from the Federal Reserve, which will be pivotal in shaping the future landscape of the cryptocurrency market. In a noteworthy market reaction, Circle's stock has soared following a strong Q1 earnings report, reflecting a 25% increase in share value. This surge highlights the increasing investor confidence in companies involved in cryptocurrency and blockchain technologies, particularly after a challenging previous year marked by regulatory concerns and market volatility. Analysts suggest that Circle's performance is not just an isolated event, it reflects broader trends in the market, indicating that institutional investments are gaining momentum as major players recognize the potential of digital assets. The positive earnings report has led to speculation about potential future growth and expansion within the cryptocurrency sector, especially as Circle continues to innovate with its offerings. Investors are particularly encouraged by Circle's focus on developing solutions that cater to the evolving needs of the digital currency market, including stablecoins and decentralized finance applications. This development raises questions about the sustainability of such growth and the potential for other firms to replicate Circle's success. As the cryptocurrency landscape evolves, Circle's trajectory will likely influence investor sentiment and shape strategies for competitors in the coming quarters. Regulatory changes are on the horizon as Tim Draper proposes a new bill aimed at facilitating Bitcoin businesses in the United States. This proposal seeks to streamline regulations and provide clearer guidelines for cryptocurrency operations, which have often been mired in uncertainty. Historically, the U.S. regulatory framework has been fragmented, leading to confusion among businesses and investors alike. Industry experts believe that such regulatory clarity could significantly boost investor confidence and attract more institutional capital into the market, potentially driving Bitcoin prices higher. Additionally, a White House official recently revealed plans for a Bitcoin reserve, further indicating a shift towards embracing cryptocurrency at a governmental level. This move could symbolize a broader acceptance of digital currencies, reinforcing their legitimacy in the financial ecosystem. However, there are concerns regarding the balance between regulation and innovation. Some advocates argue that excessive regulation could stifle growth and hinder the competitive edge of U.S. businesses in the global cryptocurrency landscape. As these discussions unfold, the cryptocurrency community is closely monitoring the potential impacts on market dynamics. Stakeholders are hopeful that these regulatory advancements will pave the way for a more established and mature cryptocurrency market, fostering innovation while ensuring consumer protection and stability. In a significant development, Bitcoin has surpassed the $82,000 mark for the first time. This surge reflects an increasing institutional interest in cryptocurrency and a bullish sentiment among retail investors. Analysts believe that this price increase can be attributed to various factors, including the growing adoption of Bitcoin as a store of value akin to gold and the anticipation of more favorable regulatory frameworks in major economies. Historically, Bitcoin has often responded positively to institutional investments, and recent trends suggest that more companies are integrating it into their balance sheets. The market's reaction has been overwhelmingly positive, with many investors expressing confidence in Bitcoin's long-term potential as a hedge against inflation. However, this remarkable price movement has also raised concerns about sustainability and the potential for a market correction. Experts caution that while the current momentum is encouraging, the inherent volatility of cryptocurrencies requires investors to remain vigilant and consider risk management strategies before making decisions. Looking forward, the cryptocurrency community is keenly observing how Bitcoin's price will evolve in the coming weeks. The outcome of ongoing regulatory discussions, particularly in the United States and Europe, will likely play a critical role in shaping market dynamics. Investors are particularly interested in whether Bitcoin can maintain its upward trajectory or if it will face significant challenges ahead. Thank you for watching today's top stories in cryptocurrency. Which story surprised you the most? Don't forget to like and subscribe for more updates.